Hi, this is Matt with EquiPredict Analytics. In this video, we're going to be taking a look at an update on the fixed cycle in the S&P 500. We're also going to be taking a look at a driving data composite comprised of various commodities that gives us a glimpse into the future of the S&P 500, the price action that's likely ahead, as well as we're going to be taking a look at our EquiPredict red wave forecasting model. All three of these components will give us an idea of what's likely to unfold in the S&P 500 going into the fall of 2025. And again, just briefly, if you're enjoying some of the content we're providing here, please do subscribe to the channel. You can also head over to our website, EquiPredict.com. We've got a lot of information over there regarding more market forecasting. We've got a whole lot of various equity forecasts you can read about. Most are locked to our subscribers, but there are some ones in there that are open for all of our readers. You can learn about our subscription model here, as well as our proprietary forecasting models, our green, red, blue wave, and data driving models. So it's EquiPredict.com. So up on the screen here, we've got our fixed S&P 500 cycle. I'll kind of just do a real brief recap for folks who are just watching this for the first time and understanding what fixed cycles are in the markets. Basically what we've done is we've just previously, and this was months ago, we've gone ahead and chosen an anchor back in August of 2024, and we haven't adjusted that. We've just simply chosen at that time, a few months ago, we chose the first significant cycle after that anchor point in August of 2024. The first cycle we chose was just only a few weeks later in September of 2024. So that's that first cycle low. So what you're going to see is, and I'll just sort of do again a real brief recap, is that these cycle troughs give you a glimpse into what's likely to unfold. Even if you go back in time, what's likely to unfold in the future with regards to cycle peaks after you look at these cycle troughs. So what you're going to see is that even though we've chosen that anchor in August of 2024, these troughs have been hit almost perfectly on these cycle lows in the S&P 500. So here we are going all the way back to this is October of 2023, cycle low, cycle high. One thing you'll notice about the fixed cycles, and this applies for really any cyclical work you do that is fixed, that is static, is that whenever you have a cycle high like this and the price action of the equity or index that you're looking at hits this cycle high and it does not really capitulate and fall into a cycle trough, if it sort of meanders or moves sideways or even slightly upwards into these cycle troughs, it gives the index or the equity an extra boost in price action going into the cycle high. Same thing here, price action sort of meandered into this cycle low here in January of 2024, and then you got a nice boost going into the next cycle high towards the end of that January in 2024. So we'll look at where we are today. Just fast forward the screen here, and we will pull up the commodity data forecast, the composite, as well as our red wave forecast towards the end of the video. If you want to fast forward, you can take a look at that. So here we are. Let me just move the cursor forward here. And again, you can see that the fixed cycle anchor that was back in 2024 of August, it hit the April low of 2025 nearly perfectly. So here we are today. Again, for those folks who may have gone long going into this next cycle trough, I wouldn't panic too much just yet. One thing to note is that you'll see that there's an almost entirely engulfing candle for the past 3 trading days in this past week. This was July 31st. This was the Thursday that just passed. Today, the last trading day that we're looking at is August 1st, which is the Friday. You're going to see that this engulfing candle was a harbinger and communicating to us that we're likely to see volatility and selling going into the next trading week. Typically, when you have an engulfing candle like that, it's almost engulfed the past 3 trading days, indicating that the next 3 trading days are likely to see something quite similar. So that is what the fixed cycle is telling us, that a cycle high might be something we'll see towards, for folks who went long, sort of the cycle trough, you might be able to break even by early to mid-August, but then another cycle low going into the end of August. That's what the fixed cycles are telling us. We're going to turn this off for just 1 second, and I'll talk to you about, or I'll show you what we've put together with regards to a weighted commodity data driver in the S&P 500 and what it's likely to show us. So I'll explain sort of how this works. What it does is it gives you sort of a roadmap as to what is likely to unfold in this particular case in the S&P 500. That's not perfect, but it does tell us sort of what to expect in terms of overall and general price movement in the S&P 500. It called us a low here, a trough here in late March, but that trough didn't actually materialize until that second week of April. That was the fixed cycle here, right there. That was April 8th or 9th. Of 2025. I think that was a 9 or 10% day in the S&P 500, if I recall correctly. So what it's telling us, and you can see, is that it's done a good job at showing us sort of this driving data in the S&P 500. What's a little concerning is that there's a loss of momentum in that going into the end of August into early September. So what you have here is essentially volatility in this weighted commodity data driving set that's showing us that there's a loss of momentum likely ahead in the S&P 500, where we're going to see either a sell-off or a serious period of consolidation before our next leg up going into late October, early November. Our subscribers will have some data on that going into the next a month or so. But let me just turn off the commodity data, and we're going to talk about sort of the red wave cyclical forecast. And this is for folks who are likely more shorter-term traders. This is our EquiPredict Red Wave proprietary forecasting model. It's for shorter-term trading, and it gives you sort of a glimpse as to sort of your buy points and your sell points in the S&P 500. And what you're going to see is it's done a good job at sort of giving us some direction as to what's likely to unfold. If you're looking at sort of your next point to go long in the S&P 500, it's likely to be towards the end of this week. Again, since we are seeing a lot of that selling pressure over the past week, this is likely not to be an ultimate, very strong leg up in the S&P 500 going in toward the end of August. However, if you're looking for your next long position as a shorter-term trader, likely towards the end of this next week when things look overly bearish, you're likely to get a nice bump up in towards the end of August. So if we put sort of all that together, you're going to see. Let me just turn on the fixed cycles for 1 second. Oops. And then you're going to have here potentially a sell-off into this trough. If you're just using the fixed cycles along with the EquiPredict Red Wave forecast, if we overlay the commodities, same sort of idea, you're going to see that this is a peak, as well as this is the peak of the commodity data forecast before we see real weakness in commodities, which also tells us that the S&P 500 is likely to see some weakness too after that last week in August going into September. So I hope that helps with your trading journey and gives you some insights as to what's ahead in the S&P 500. If you have any questions, feel free to drop them into the comment section or write to us over at EquiPredict.com. Good luck and good trading out there.